This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is an international edition from interest.co.nz. And today we lead with news markets are increasingly sceptical of Chinese policy actions to turn around their economy. But first, initial US jobless claims came in lower than last week at 225,000, although that was a lot higher than the same week a year ago. There are now just under 1.6 million people on these benefits, and that is similar to the actual levels a year ago. US retail sales came in up 1.7% in September from a year ago, a far lower gain than the 4.2% year-on-year gain in the same month a year ago. But there was a good gain in September from the prior month to about the year ago annualised rate. So maybe that will have the Fed holding back from more rate cuts. US industrial production came in at 0.6% lower in September than a year ago and also lower than August. This is a weakish result for them, but the ongoing Boeing strike and the shortest East Coast port strike may have played a part in this downbeat data. But neither the lower production nor those industrial disputes are distorting American business inventories. And that softness is not universal. The Philly Fed Factory Survey was surprisingly positive in October, and for both current and future outlooks. This region is a core manufacturing zone. And exports from Japan shrank by 1.7% in September from the same month a year ago. It was another big Japanese data miss because markets had forecast a 0.5% rise. Apart from the pandemic reversals, it was their biggest year-on-year fall since December 2019 and driven by fewer car exports and fewer machinery exports. It was the first drop since November 2023, with sales of transport equipment declining fast, weighed by motor vehicles and semiconductor exports. Yesterday at a briefing, China's Ministry of Housing said it will expand a so-called whitelist of property development projects and bolster that with 4 trillion yuan of financing to property developers through banks by the end of the year to allow them to complete stalled projects. But markets thought this was a bit lame in the circumstances, and they all moved lower, with equity markets falling 1% and yields on Chinese benchmark bonds falling too. The yuan slipped as well. Markets haven't yet seen the policy action they want after the bazooka expectations were started a month or so ago. That is not saying the market is right or that Beijing policy approach is wrong. It is just that markets are voting actions so far down with their funds flows. China's next steps will be to lower their loan prime rate at its next review. Meanwhile, Singaporean exports rose 2.7% in September from a year ago, but this too was less than the 9.5% rise expected. And as expected, the ECB cut its policy rates by 25 basis points, the main one falling to 3.4% at its overnight meeting. And also as expected, Turkey kept its policy rate unchanged at its overnight meeting, but at 50%. They are still battling inflation, and it has come down recently, but is still running at 49% a year. The Australian September labour market report saw jobs rise by 64,000, their best since February, and far higher than the 25,000 expected. There was a very good rise in full-time jobs, up 51,000, and there was also a rise in part-time roles. Their jobless rate was steady at 4.1%. Along with their relatively high inflation of 3.8%, this labour market strength may put the kibosh on a rate cut at the November 5 RBA rate review. Global container freight rates fell yet again last week to be 126% more than the pre-pandemic levels. It's still principally outbound China cargoes that are weakening. Perhaps more telling is that bulk cargo rates were down 6.9% last week from the week before and are now 16% lower than year-ago levels, all on weak demand. The US Treasury 10-year yield is now just on 4.10% and up 9 basis points from yesterday. And the price of gold will start today at $2,690 an ounce and up $20 from yesterday, and another new all-time high. And oil prices are holding lower at just under $70.50 a barrel in the US, while the international Brent price is still just on $74 a barrel. And the Kiwi dollar starts today at 60.6 US cents and unchanged from yesterday. against the Aussie were down 40 basis points at 90.5 Australian cents. Against the euro, we've risen 30 basis points to 56 euro cents. That all means our trade-weighted index starts today at just under 69.2 and unchanged from yesterday at this time. And the Bitcoin price starts today at $67,330 and down 0.5% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.